A very good evening to our Friday evening's session, Mentorship Invest Meet. This is Friday the 13th of August 2021, 9 p.m. Indian Standard Time. It's been a good week for the market. Let's take a look at the Nifty and few sectors. And like always, then we will go to your questions related to your stocks and investments. So two successive weekly gains for the Nifty futures. This is the Nifty futures here. And after a multi-week consolidation, the index has finally given us a wonderful breakout. I think on a low to high basis, we have close to 700 points rally. It's a nice rising channel that I have here for you. This consolidation took the index quite some time, and now we've got a clean breakout. The possibility of a test of this channel border top is close to 16,700 kind of levels is very likely. And as it approaches the channel border, it will be very important, crucial, critical to see whether the index shows any sign of resistance or not. As of now, I would say that this breakout has been one of the cleanest one. It took out 15,900, 16K, 16,1, 2, 3, 4, 5, and it was pretty smooth. This is the daily chart, and this was the first leg of the first bout of momentum, which took us a breakout above 15,900, 16K. Then it took a breather over here, where I think shorts would have got created, just to got them in a wrong foot with today's almost 1% move to test 16,500. 16,500 is, of course, a psychological level. The possibility, the probability of the index extending further up is higher, but as it extends further up, it might tend to slow down. Short-term charts, if you take a look at, tends to be a little stretched. This is a 125-minute chart of Nifty futures, and as you can see, 3, 6, 8 consecutive bars positive. Now these are rare events. This shows the kind of resilience that the market has shown. So it is likely to slow down early next week, but overall, strong uptrend, resilient uptrend, momentum supporting the index. Sectoral relay is also beautiful, so it makes sense to keep your bias positive. If you had gone for contrarian shorts, I'm sure you must have paid the price by now. So it is not necessary to go contrarian short at this juncture of the market. Let it show some signs of weakness, some topping out possibilities, and then we can look forward. So maintain a bullish bias, ride the trend as much as is possible. It's always much easier to generate returns when you're on the right side of the trend. So a bullish bias on the Nifty. Now, quickly, I'll share some levels and then we'll take a look at the sectors. From a very short-term perspective, intraday on Monday, Tuesday's trade, if we see any kind of a correction, then this highs, which were the short-term resistances around 16,350, 16,300, should act as your immediate support. We saw how beautiful 16,150, 16,200 held the recent 3-4 day consolidation. So that's the next level. And then we have the 15,900, 15,950. When the market falls, the supports break. Now we should be prepared with our levels. And I think that these three levels we should keep in mind. A retest of 16,350 should not be discounted, but a possible retest of 16,150 is unlikely as of now. We'll see what the market has to offer next week. Let's take a look at the sectoral behavior. I'm back to the stock charts, RRG charts, which will help us to understand the relative strength and the momentum of relative strength of the various sectors. So what I have here first, let's take a look at the table. I have taken it in 1 week and sorted in terms of percentage change. CNX IT, biggest gainer this week, followed by Nifty, the benchmark itself. Then we have some underperforming sectors bouncing back: energy, financial services, banking. Some audio. Put yourself on mute, please. Okay. Yeah, sorry for that. So we have few underperforming sectors picking up a little bit. We have the Bank Nifty, private banks. We saw how beautifully stocks like HDFC, Kotak Bank, ICICI Bank, and Axis Bank moved. SBI, of course, is far away from that rally. Then, interestingly, we have the FMCG and consumer durables. And this is going to be an interesting play. I'll tell you why and how. And then we've got a mixed performance. The losers, we've got pharma. I think we spoke about this last week. We saw Lupin breaking down significantly. And we have PSU Bank, which I spoke about, SBI, and real estate. Now, this was sorted in terms of percentage change. The RRG chart helps us to understand the concepts of relative strength and momentum of relative strength. Simply, what the RRG chart does is it has created, I'm just quickly going to talk about the basics so that those who are new do not feel completely lost, left out. So we've got leading sectors, weakening sectors, lagging sectors, and improving sectors. If the sector moves horizontally to the right, it is gaining relative strength. If it moves horizontally to the left, it is losing relative strength. So any movement on the horizontal axis is relative strength. Any movement vertically up, as in straight up like this or whatever, like up movement, is gaining momentum of relative strength. And any movement down is losing momentum. Okay. And it has been observed that these sectors tend to, not always, tend to flow in a clockwise manner between leading, weakening, lagging, and improving. Now, on a weekly basis, it makes sense to take a look at the flow of the sectors from at least 2 to 3 months perspective. So I'm going to take a look at 12-week movement, and we'll take a look at IT. IT has bounced back. It is relative strength is strong and growing strength. Now, few important things. Which are the sectors which are in the leading quadrant? Real estate had picked up wonderful momentum. See, it was in lagging, then it picked up momentum. Momentum always comes before strength. Any sector, any stock, anything picks up momentum first and then relative strength. So momentum picked up, took us to improving, and now it's a leading sector. This is going to be an important sector next week on the long perspective. So keep a close look at DLF, Godrej Properties. These are the two which are there in the futures market. Others you can keep a look at, like Overa Real Estate, Shobha, etc. IT definitely strong. Now let's come here quickly. Let me quickly show you a real estate chart. This is from the weekly perspective. Now it has come off. This is the daily chart. Now you can see it has hitting our 1334 moving average supports, and it's trying to consolidate. It did give us this sharp move. So I think it's probably will try to consolidate and give us a move maybe next week or the one after that. IT exceptional strength, just unstoppable kind of strength. Doesn't make sense to enter at this juncture. Definitely wait for a correction. These are the two main sectors. Then we have media. Doesn't matter too much. PVR, Sun TV, Z Entertainment. It was never a big fan of these stocks. Tend to go into the ban period, especially if you're in a futures market trader. So media, let's not talk about it. FMCG, consumer durables. Now, FMCG, consumer durables, we know we've been talking about these two sectors for a very long time, especially with the help of these RRG charts. Especially for these two sectors, I'm going to extend it from 3 months to almost 6 months. Let's do it 24 weeks. I'm doing this purposely just to show you how consumer durables had gained momentum, lost momentum, now gaining momentum as well as relative strength. This is consumer durables. FMCG gained momentum, lost momentum, as it did gained and lost momentum. See, 6 months back it was here. It gained momentum, but it was moving to the right. So what it is doing, it is gaining momentum and strength, now losing momentum, now again gaining momentum and strength. This kind of movement generally tends to go towards the leading. which generally means that FMCG and your consumer durables are likely, should outperform the benchmark. Outperform the benchmark does not mean it will go up. If the benchmark goes up, it will go up more than the benchmark. If the overall market falls, it will fall less than the market. That is what outperformance means, not necessarily it will rise. So keep a close look at the FMCG and the consumer durable stocks for the rest of the next week and next to next week. I think next week is a truncated week. I think Wednesday or Thursday is a trading holiday, so keep that in mind. So FMCG is essentially in an uptrend, cup and handle kind of a behavior up here, give a breakout. So stocks like ITC, Hindustan Unilever, definitely Dabur is also there, Marico, Colgate Palmolive, and consumer durables. I would see consumer durables essentially is on the verge of a short-term breakout, but I'm more interested in FMCG stocks like Hindustan Unilever. ITC is a bummer, but Dabur, Colgate Palmolive can be interesting place. There's a chunk of sectors in the middle. The middle is what? The weakening. Metal. Metal. Look at the movement. It has, earlier it was one of the strongest sectors, if you remember. Now the over the last, okay, this is 24 weeks, so I'll take it down to 12 weeks, just around three months. So all it has done, it has lost a lot of momentum, and now heading leftwards means it's going to lose relative strength, likely to lose relative strength. What does it mean for us? Let's take a look at CNX Metal. Let's take a look at the weekly chart, which means that if that story has to come true, if the RRG story has to come true, yes, the index has been showing strength. Yes, the index is going up, but we should not be as bullish on metals as we were a couple of weeks or couple of months back. So little bit of carefulness is needed. And we've seen that. We've seen how stocks like Jindal and Tata Steel fell very sharp and bounced back also very sharp. So it's a volatile space. Small cap, commodities, PSU banks. Now this is disturbing. PNB, Bob, SBI is an important counter. So this space is underperforming. It's losing momentum strength. So I think we should stay away. Pharma, look at how it has completely given its momentum. And that's one sector that we spoke about it last Friday, I remember. And maybe the story, the outperformance of pharma is likely to slow down. It is on the weekly trying to create a kind of a saucer top, rounding top kind of a behavior on the weekly charts. I think it will be more clearer. I have some lines drawn here. Now, essentially, pharma back to its lows. Now, this is not good news. It's heading back to these supports quite often. And if this breaks, it might turn out to be an important break for the sector, which can easily see a retest of close to 13K. So be careful. We've seen such falls in a few of the stocks like Lupin. So we would probably stay away from it, or if we trade it, it will be short-term in nature. Auto, underperforming, losing momentum. Private bank was picking momentum. See how beautiful it was picking momentum. That is exactly as we noticed. iBank, Axis, everyone moved well. Now it's losing a little bit, but I think we should keep amongst the banking financials. We should keep private banks in our list for long trades. We can look to buy. Same logic goes for Bank Nifty and financial services. Energy, a little disappointing, because if you take a closer look at energy, few weeks back it was gaining strength and momentum, and then it completely gave away. This is where your OMCs like IOC, gas stocks like GAIL and all this fell hard over the last month and a half. Now they're bouncing back, but any trade in this space, keep it short-term in nature. Any trade in the auto space, I would also suggest keep it short-term in nature. Similarly, for pharma and metals, I think FMCG consumer durables have the best opportunity because they're picking up momentum. And between real estate and IT, I think it would be real estate, provided the supports hold and we get some movement. But overall, considering we had a great run, we had a great breakout, show of strength from the Nifty. Even if you don't have any inclination to buy breakouts and chase the market, it's better just to wait for better opportunities and keep a bullish bias. Keep a bullish bias. Don't try to short the index or the market right now, because As of now, none of the time frames are showing any weakness whatsoever. All right. So with that, I'll wrap up the market view. Let's now go on and discuss the stocks and investment ideas.